Welcome to another episode of Real Estate Investing Explained. Here's today's question. With the talk about that market crash that we experienced then, I'm curious to get your opinion where you think we are in the current real estate cycle and how is that impacting your business? Are you thinking back to last recession and trying to slow down your flipping now because we might be towards the peak, or what are your thoughts around that?
Yeah, I'll preface this by saying I'm really bad at predicting, obviously. So you look back at 2007, you and we chatted briefly before the call about how we're both big Warren Buffett fans. And this is one of those lessons, wisdom that I really take to heart from Warren Buffett, is that people who try to predict things are, so often wrong that we ought to it's just kind of entertainment. So everybody who's listening to this, just take this as entertainment from me. But I feel like just some of the things I notice in the market are that we feel like we're at a peak, or we're not at the bottom of the market. That seems pretty obvious to me. But like how long this will last, when it'll change, when the next recession comes, what that recession will look like. My uneducated opinion is that it doesn't seem like people are getting as many crazy loans as they did in 2005, 6, and 7. So typically disasters don't strike twice in the same exact way in the financial market. So I just don't know what it'll look like. But what I am, we always have to take that uncertainty and have a strategy. And so my strategy and our strategy is dictated more really by where we are in our career at this point. And so we are deleveraging a good bit. We're taking cash that we generate and save, and we're paying off debt, even though it's low interest debt, even though it's, we pay off 6% mortgages or 5% mortgages. And we've been doing that for about 5 or 6 years because we paid off the worst debt first, the ones that had balloons on them, where we had to pay off the whole balance in a couple of years or something, or they had a big adjustable rate mortgages. So we feel very comfortable with our debt structure now. We still do have some debt. And so that's been because we've just been cleaning up our balance sheet and making sure things felt safer and were solid. And that's partly because of where we are in the market, but that's also just more where we are. We felt like we've grown enough to where growing and buying more and more and more and more would get us some more money, yes, and some more growth, but we'd sacrifice stability and kind of our resilience in case whatever we tend to face in the future.
That's all for this episode of Real Estate Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.